I think the most important factor in succeeding in 2020, depending on the strategy, is to be decisive. We've had a lot of clients that have stayed on the sideline waiting for the other shoe to drop, and the data has not suggested that a major downturn is around the corner. Even a year ago when the Fed was raising interest rates, 6-7 months ago when the yield curve inverted, certainly there was more concern, but the data, the fundamental data of vacancies, rent growth, the lack of overbuilding at a broad scale, ongoing job growth, even then, those data points really messaged a pretty steady outlook.
For 2020 is obviously look and see what the what 21 and 22 look like. So make smart bets. You know, one of the things that we saw in the past few years, a lot of investment on value add. You know, we're not really a provider of value add. We're a long-term fixed rate solution. So our clients should be paying attention to what's going on in the marketplace.
So competition is you know, an enormous challenge for everyone. You look around this conference, even how big it's gotten over the last several years. So that's true of lenders. It's true of borrowers and owners. So the biggest thing that we can do for our clients, again, is to advise them on the best structures to take advantage of various markets and asset classes.
I think in 2020, for us personally, we're going to be looking at things with more of a rifle approach this year rather than a shotgun approach. Meaning, when we go into new markets, we are going to be looking at key drivers on a greater level of detail. We're going to be using analytics and data more frequently, understanding exactly where the deliveries are happening. As I mentioned before, we're going to see record number of deliveries this year. And so for us personally, we would like to isolate ourselves from those deliveries and try to find unique assets that are able to flourish on their own and not have a huge pipeline of deliveries that are going to compete with us directly.
I think in order to be successful, our clients are going to have to be a little bit more nimble, start looking to secondary and tertiary markets for their deals. It's been harder and harder to find deals, but interest rates should remain low and that should help them find those deals. I think they're going to have to adapt.
Yeah, from a debt perspective, I think what clients really need to do is anticipate what their needs are going to be and work hard with their lenders to prepare the packages for the lenders to take a look at, and then be real clear and crisp on your capital stack needs and what specifically you're looking for.
Yeah, 2020, you know, we're entering into a phase of this cycle to where with rent growth slightly slowing, we continue to build. It's going to be challenging in some submarkets. We're going to have to really buckle down, okay, and really maximize those expenses, those dollars. And on the diligence side, really dig deep with regard to demographic segmentations within the investments that you're making. Okay, we've got plenty of job growth again in multiple markets, but it's not as easy as it once was. This isn't 14 and 15 where we're having double-digit rent growth. And so in some markets, it's a little bit of a blood sport out there. And so there's a little bit more of an artistry to it today.